to go, and welcome Robert and Nathan and anybody else who's tuning in as we go here. Hey, and we'll try to make this as interactive as we can. I don't know if the raise your hand thing is on or not, but we'll be happy to promote you to panelist since this is going to be a kind of a small one today, since we rescheduled, and I think most people are playing on the replay. But hey, I just got back from Boise, Idaho too. That was an interesting experience. I was a guest speaker for Dan Kennedy and Russell Brunson and those guys. I'm jealous of their studio. They have these like full panel LED screens, and they had 350 people on Zoom while I was talking, and they have them all on the screens, everything else. It was quite the elaborate thing. Of course, they're $100 million company, so it's quite the elaborate setup. But Greg, Mindi, we have Mindi Godfrey on here, and Mindi, you have an extensive background in live event promotions and operating events. You've been in charge of events up to what we figured 45,000 attendees or some ridiculous number like that.
Yes.
And Greg, you and I have done, I don't know how many events over our lifetime. I think I figured it out one time, is it was more than 500 that I had promoted in different arenas with a range of pitiful turnout up to I think the peak was 3,500 at one time, or 3,800 at one time. And I don't know how many you've done, but I'm sure it's probably approaching that range.
Something like that, yeah, as well. Yeah. I think your number's probably pretty low too. That's a low estimate for you.
That's probably well. Yeah. I'm not counting the stuff run by staff that I didn't.
Yeah.
We were probably running I don't know 100 a week that were had no involvement from me other than the marketing strategy. Making sure that people who were on the staff did the right thing. But I guess as far as brief introduction, we've been running marketing and so forth for our own businesses, as well as people who ask for help. And then now, as we set it up as a coaching and consulting structure for as long as I can remember. I'm coming up on 40 years of being self-employed. Greg, you're coming up on how
long? This would be about pretty close to 30 years, 29 years.
Yeah, 30 years. And we've been helping other businesses do it. In my case, I kicked it off by writing that first book on internet marketing in what would that be, 2009, and then hosting boot camps and then coaching and one thing or another right after that. And then you've been probably about 10 years now.
Yeah.
Yeah.
Well, and I did a lot of coaching and consulting before that, just within other structures.
Yeah, that's true. That's true. But getting right down to it, I was having a chat with, I mentioned Dan Kennedy, our friend and mentor, with Dan yesterday, and I was asking him, what his biggest concern is for financial advisors and so forth, and I'm going to read his quote. Because I wrote it down. He says, "You probably know it already, but you are in big trouble. Few are positioned to prosper. You ought not do it alone. We've got the formula." That was the direct quote from my conversation with him. I said, "Hey, don't talk so fast. Let me write this down." And of course, what he means by that is, in this niche, we have an economy that's going kind of haywire. We have the latest Ponzi scheme. And in fact, Greg, I think I mentioned it to you before when I read all of Ken Fisher's books. One of the more brilliant ones was the one with the Madoff miniseries going on right now. It was the one that he wrote as a response to the Madoff deal that happened. And of course, now we've got the cryptocurrency Ponzi scheme, and we're just outright fraud and everything else. But it's not quite 2008, but it's approaching that. We're right now in a cross between what I would frame as the Carter administration combined with the Madoff period, without the quite as severe a housing meltdown. And so it's one of these periods of time when, of course, as an advisor, it's difficult because trust in advisors is, it doesn't help that. And by the way, it's very good. I'd highly recommend everybody watch it, but it's scary, watching the Madoff wealth advisory firm with the number they used was, I think, 64 million. The reality, it was 19 billion with a B. The reality is it was 19 billion. People had invested their money that just disappeared, and then they clawed back a chunk of it. But still, having that airing right now, combined at the same time with the Bankman-Fried thing, combined at the same time with the Carter-esque economy that's going on, is not good timing and not a good sign if you're a financial advisor. And Greg, we have a number of solutions to that, and of course, one solution is was the Ken Fisher example of putting together a book. And this is not an advisor book. I have a jillion here behind my desk and all around my office, but this is a book that you helped somebody put together just recently. And notice it's only like 38 pages, but one way to do it is write the book that addresses all of that stuff and addresses the solution. That was the Ken Fisher approach I was talking about recently. And the conversation, Mindi, as you were trying to kill me off by Zoom, that we were just coming off of was one about how badly most advisors do in handling referrals. Because, Greg, everybody we talk to almost always says that vast majority of my business comes from referrals. And then you and I always have the same follow-up question, which is, walk us through some of your referral systems, which almost always gets a blank stare, right? Yeah. And even seven-figure earners, one of our clients who's doing 1.5 million or something like that personally a year, he gave me a blank stare, right? Well, what do you mean by referral systems? When I meet with people, I ask, okay, well, that's a little bit of a system. Let's walk through the script of how you ask them. Well, what do you mean? You don't have a defined process of how you ask? Well, no, I just ask them. I said, well, before you go into the meeting, do you know anything more about them than what your legacy, recall was that you met them last 6 months ago or 12 months ago? No. Okay. Well, couldn't we get your staff to go, cyber stalk them a little bit, go through their LinkedIn profile, make sure we're up to date on where they work, who their associates and contacts are, what school they went to, what organization they're currently involved with, whether they've changed jobs. We started out with, why don't we do a little bit of prep work ahead of time, and let's do an isolate faces script. There's if you just ask somebody broadly, who do you know in your family or friend circle who needs help from me, they don't know, right? They draw a blank. But if you isolate faces, in other words, I come in knowing that you're at XYZ corporate and that you're in this club and this organization, you're a fan of this, I can start asking you about people in that group and in that circle, and then, of course, about your immediate and more distant family. And even in his case, coming up on 30 some years in the industry, that was just like a bolt out of the blue. Oh, you mean I can be more effective at just asking? Well, yeah. But the other thing we find, even on that simple topic, is you and I found out, I don't know, at least 20 years ago. I'm gonna claim to the old fart here as 35 years ago. I figured out that my clients are really bad at pitching my services to their friends, but they're happy to invite their friends to come along with them to an event that seems like it would be a good fit, right? And so if you create events that would be a good fit for their clients, and that can be a Zoom meeting, it can be a webinar, which a Zoom meeting I'm defining as interactive. It could be a meeting in your boardroom, or it could be a steakhouse, buy him dinner type of thing, although that part really isn't necessary. But regardless of what it is, they're tickled to death to invite their friends to come along with them to something they think will be valuable, right? And they're tickled to death to invite their friends to come down to some, impressive or fun looking client appreciation event. the event that's held at the art gallery that's owned by a friend of yours, the thing that's held at the winery, the thing that's held at, something interesting like that. And so even when it's a mundane topic like referrals, one is right there is having a better method of talking to your friends, having events that you can bring them to. That's a good start, right? And then the other thing, going back to the Madoff and Brinkman, what's his name? Brinkman Fried or whatever, that goofy looking.
Yeah, the current crypto guy, or the current, no, it's not. Yeah, it's not even crypto. He looks like he's a
it's crypto. It's but it's a good lesson in just to study why people would give that guy money.
Yeah, exactly.
Yeah, but doing something to overcome that is a necessary step. The other thing I was going to say about referrals is that was why I brought up the book, is having pass along tools like this one, where your clients get tools that that they can pass along and they can share with their friends is a really good solution. What would you add to that?
Well, yeah, that's where I was getting to. And, when you're talking about like the art appreciation and some of the client appreciation days, what we end up having a funny reaction sometimes is some of the guys we work with have said, oh yeah, I did that once. Well, did it work? Yeah, it worked great. Did you ever do it again? Oh no, I never did it again. And it's kind of ludicrous on its surface those things work really well, but then they never think about doing it on every quarter basis or every regular time. And then when they do those kind of events, or they have a webinar, or they have an event, what we also find is that people are very, very bad at making them very exceptionally effective. Mm-hmm. Some of the people we're working with, they, do a seminar, do a webinar, and then essentially not much more than hand people their business card and then hope and pray that they're going to get an appointment afterwards. Yeah. And then they complain that the event they did, they filled up with 50 people and they did a big seminar, or, in the worst cases, they bought them steak, which isn't, as you said, isn't necessary. It really isn't congruent with the message, but they do it, whatever happens, they get 50 people in a room and then they complain because they only got one appointment or they didn't get any appointments from it. Well, if all you do is hand them a business card, you might as well go out on the street and hand out flyers. Yeah. There's much more effective ways to set appointments before the event, at the beginning when they walk in, during the event. And people it's kind of frightening how bad people are at making these events effective, let alone some follow-up after the event.
Well, even the ones that have gotten a positive ROI from, let's say the postcard goes out and it's a picture of a filet mignon and it's held at a steakhouse, and oh, by the way, there's this financial topic. Even the guys who have had a positive ROI, we did a diagnosis of one of our clients, a new client doing this, and he was frustrated wanting to kill it. And we went through and looked at it and said, well, okay, but you're making 3 times back your money on every one of them. Why does he want to kill it? Well, I'm just tired of doing it. Well, okay, well, that's probably not a good reason. If you're tired of doing it yourself, you can hire somebody who can do it. But then we went through, and this is to amplify what you just said, Greg, is we went through the steps. And I said, well, what's the first thing that you're annoyed with these events? He said, well, we get an awful lot of people in the room that's unqualified. So, okay, so are you doing the promotions yourself, or are you hiring somebody to do it? Oh, I'm hiring this mailing company that does advisors to do it. Okay, well, let's look. What list are they mailing it to? Well, they're mailing it to a horrible list. And it's like, well, if you don't want people who fit this criteria to show up in the room, don't invite them. He said, well, they told me that's they just can't. I said, well, and we took 30 seconds, logged into the list management software, pulled up and said, look, all they have to do is click a box here, a box here, a box here. And it may be a smaller list, but what you're doing now is you're buying dinner for people who are unqualified. Don't invite people who aren't qualified, right? And it was like, oh my God, they told me they can't do it. I said, well, they're either morons or they just want to, charge you more because they're coming up with a bigger list, but you don't want those people. Then we walk through the steps, and it was, as soon as they register, what do? Oh, I remind them of the live event. Okay, well, what's the show rate at the live event? Okay, what do you do for all the people who don't show? Oh, well, I don't do anything. Okay, well, shouldn't we be, a minute they register, making an appointment for them? And even the ones that don't show up, we're making an appointment for them. And shouldn't we have maybe somebody, but not you, on the phone to these people and pre-qualifying them? So if somebody slips through on the list, once we fix the list, you're only talking to qualified people. Oh, I never thought about that. Well, what's your closing ratio, right? Well, he was, he thought he was great at sales, but he was closing, I think, 20%. It's like, well, okay, why is your ratio so bad? Well, turns out they're sitting down in front of him with no preparation. They don't see him as an expert. They don't see him as a guru. He's done no preparation ahead of time. That's what we always do with, boxes and books and videos and all kinds of other stuff ahead of time, right? Doesn't have to be terribly complicated, but we'll prep them ahead of time and prep them to be impressed with us. But then, of course, it comes back to, he was talking to unqualified people. They had no idea who he was when he met with them. He's having to pitch himself to them rather than having tools and third-party testimonials and stuff, prepping them. And by the time it was all done, he was already at a positive ROI. But by the time we were done, we quadrupled the number of new clients he was getting and boosted by double the quality of the people he was getting, because he stopped taking the ones that, well, he felt bad to say no, because he wasn't even talking to those to begin with, right? And stopped taking them just because he felt like he had to, because he already invested the money in the process, and got to the right people. What would you add to that?
Well, and what we want to make sure everybody understands is that it isn't that much more work to have the same marketing strategy. It's the same marketing strategy. You're not really spending any more money. There might be a little bit in terms of a little bit of time that you have to do some more pre-work and a little bit of follow-up, and maybe send some more materials to them along the way, and send some more materials to make sure they confirm and they get an extra, once they register, that maybe they get something in the mail to make sure your show rates are higher. So there's a little bit more work in the middle, but it's a lot easier to do what we're talking about than it is to run and, end up getting, instead of maybe 5 clients, you get 50 clients. Than it would be to run 20 more events. It's so much easier to do that. So sometimes when we tell people to use this kind of strategy, they're like, oh my gosh, that's a whole bunch. Oh, that's a lot. Well, yeah, but it's a lot easier than running, 10 times as many events and being more frustrated by it and not getting as good or not even close to the results you want. And each one of those things that you talked about can double your effectiveness at one of the events. So each one of those doubles the effectiveness. So it's not exaggerating at all to get 10 times, 20 times the results from something like this.
Yeah. And by the way, in that example I gave, he was having 0 referrals show up at the event. It's like, well, why isn't this also a referral event? Why isn't this something where you send tickets out to all your clients and they all bring their friends? You give them
and all past clients too. It was missing out all past clients, people that had maybe raised their hand to say, I want to, I'm interested in working with you, but then maybe they dropped off the radar because at the time it wasn't the right time for them to switch over to them. Those are all people that you invite to these things too.
Yeah. It goes on and on and on. It's almost endless. But going back to because I just came back from Boise doing this thing, the example I used to their audience, and they had 20,000 people or so on this feed. It was pretty amazing. And Greg, I'm in complete lust for their in-house movie studio. Absolutely no need for it at all, but you would have been shocked by all the stuff. But the conversation I was having to their audience it's Kennedy calls it, you've got to present everything from the standpoint of the conversation they're having at the kitchen table after they sent the kids to bed. right? And just take that one example of you're buying them a steak dinner at the local steakhouse. Nobody is sitting down at the end of the night going, well, Martha, we need to find a CFP who's going to buy us a filet mignon so we can sit through a financial pitch.
Yeah, it's ludicrous on its surface, but that's how everybody's marketing.
Yeah. And you know, when you see the website, their LinkedIn profile, everything else, it's all about alphabet soup, right? I'm a CFP, I'm a CHFC, I'm an RICP. And I think we're up to in the industry something to the order of 72 different designations and certifications of different types, you know, in the running the gamut of life insurance to fee-based planning and so forth. Nobody knows what any of that stuff means. And, you know, I mean, the CFP guys are running ads that you need a CFP and always paying attention to that. They don't know what the hell that means when they see the ad. But the point was getting inside the conversation that they're already having. I call it getting inside the conversation already going on in their head. And what's the conversation going on in their head is, oh my goodness, we're approaching retirement age, and I hate to think that I can retire and then not, you know, we're going to be able to stay retired? Is this something we're going to have to go back and get a job? Is everything going to go south? Or there's such instability out there, you know, oh my goodness, this last Ponzi thing, I don't know. I don't trust any of these guys. I don't want to give them any of my money. Oh my goodness, you know, real estate prices are starting to implode again. Oh my God, Martha, I remember that happened last time. Are we in bad shape on that? They're having those kinds of conversations, right? They're having the conversation of, are we going to outlive our money? Are we going to be able to stay retired? Are they going to, you know, have to live just on Social Security because their retirement is going to dry up with the craziness? What's going to happen in the economy? Oh my goodness, our portfolio is down. You've got to get inside of that fear and that reality and be communicating about that. And so if you hit the right note, I'm not showing up, you know, the industry term is plate liquor, which I think misses the point. You know, it's good to have an audience of people to talk to. And if your only bait to get them in the room is you're going to buy them a steak, you can't be surprised that people are showing up for the steak, right? But if I got inside the conversation going on in their head and they're going, oh my goodness, put this on the calendar, we've got to be at this thing, because that's exactly what we were talking about last night. This guy has the answer to that. It goes a long way in having a qualified person, has a whole lot of thing of getting a highly motivated person. It goes a long way towards moving them to the next step.
Yeah. And that expands the types of marketing that you can then put out. So there's lots of other media you can push that message out on. There's lots of other ways that you can get the message out. You know, sometimes people are messaging on LinkedIn, and we talked to somebody, I think, yesterday, and they wanted to work in the doctor niche. And I said, well, okay, well, what are you doing on, you know, to contact those people? Well, I thought that I would send a message about how to manage your 401k. Okay, that doesn't sound very sexy. I mean, it's not very interesting. But if your message was something like, you know, how doctors, you know, how to manage your 401k so you don't work forever and retire broke, or work forever or retire broke, that's a different message. That might be the message I think a lot of people, believe it or not, you know, a lot of doctors go to school forever, then they go work, and then they stress about working forever and maybe retiring without any money, even though it seems like a high-paid profession for everybody else. That's a big concern that they have. So that's a good example. And that was just yesterday that we talked to somebody about that. And the messaging ends up being this milquetoast kind of messaging that we think we have to do because we see the whole industry doing that. I think that's one of the messages, is we see the whole industry and all the, you know, no matter what company, whether it's Northwest Mutual or LPL or anybody, Fisher does it a little better, but even so, it's such a light messaging, you know, how to retire, what to do to plan for the future, things like that. That's not what people are stressing or worried about. People are worried about, you know, am I going to be able to survive when I'm when I retire, or can I retire by the time maybe they want to be assertive, and if they're in their in their 40s in a high paying profession, what can I do to retire by the time I'm 50? That might be a message depending on your niche. So there's
Fisher's, while you're at Fisher's ads are just a personals ad, right? They're if you have $500,000 or more, things you need to know blank. I mean, that's every one of their ads is some version of that, right? And basically they're saying if you have $500,000 or less, if they think of what back when you had papers in the personal sections, that was a personals ad. It's looking for, I won't give the right.
So anybody over 35 or 40 would understand what you're saying, and below 35 or 40, trust us. That's what people used to have. Now you'd have it online, but that's what you'd have online if somebody was dating. Here's all the stuff, and here's what I'm looking for, and that's the way, to some degree, what your marketing message needs to have. This is the niche that I'm looking for. That might be something to address, Stephen. Is what we also see is people trying to market to everybody. Well, who are your clients? Who do you want to work with? Well, really, I'm good for everybody. I'll work with anybody. And I'd like to, well, that's a really difficult position to be marketing from.
Yeah. And I don't want to get off and you're right. I don't want to get off of the point you made a minute ago, though. And again, it's fresh in my mind, my good friend, David Phelps, and his company is called Freedom Founders. Freedom Founders. Yeah. See if I can get that right. But his whole thing is, he used to be a dentist, and you wouldn't have to be to do this, but he markets the dentist. And the whole thing is, here's how you get freedom from your practice. So it's all marketed at dentist 45 and up, but his niche is really 50 to 60. And the steps that we're going to take to have your investments create enough cash flow that you don't need, to show up at your practice anymore, that you can shut down or sell your practice, right? And so, again, niching is something that gets misunderstood a lot. Is the first thing people think is, oh my goodness, I have 150 clients and they're across the board, they do everything. Well, you're the one that rounded them up, number one, but you can certainly market to and be an expert to more than one niche, but you should go after one group at a time. And it's much better, in David Phelps' case, to be the go-to guy to help you get out of your dental practice and into being financially independent than it is to be anybody in the world I work with. You need me. And again, the other conversation at that event was the bozo explosion. One of the top level gurus, sharp guy, well developed. He just has no marketing sense. One of the first things I read of his stuff was, you're in a business where everyone needs your service. Well, maybe, but it's a horrible strategy.
Right.
It's a horrible strategy. You got to pick your target, your avatar. The advisor we were working with, on my Death by Zoom today, what was the language you used about what he's looking for? He's looking for deep red patriots with what's the rest of the checklist?
Passionate patriots, deep red. Was there something else in there? I think that was it.
Yeah. Well, if I start with that, it's not narrow enough, right? But I know where to start looking, right? So I can go find conservative news outlets. I can go find conservative newspapers. I can go get lists of people who are, top Republican donors, if that's what I was looking for. The political parties do it all the time. They know who they're targeting. They're not targeting for donations people who are at the opposite end of the spectrum that they are. And so it's a good start. And it's much better to say that I am this and this is what I'm looking for. We got a couple of advisors who are exactly in that target niche. But then the problem is, we were talking to one gentleman. He was afraid to wear it on his sleeve, and it's again, it was a conversation we were having with Dan and with Russell Brunson. You know, be what you are, right? Is once you decide who it is you're targeting, be that, right? Don't try to be unoffensive. Don't try to fit in all categories. Define your, they call it avatar, but define your ideal client, and it better be something that's a sincere, good fit for what you are, by the way, and then target them effectively and aggressively and wear it on your sleeve.
Yeah, we've had advisors we work with that were in the in San Francisco in the LGBTQ community, and that's the group that they're targeting. Okay, you know, they're going to be targeting that community. That's fine, but they should be they shouldn't be trying to target that community and then also trying to target at the same time with their same marketing.
Complete opposite.
The complete opposite community. They're going to end up being have mixed messages that they're sending out. There's going to be plenty of clients in any of those niches, but that doesn't mean you have to. We're not also suggesting you have to target based on your political affiliations.
No.
You could have a strong political affiliation, but you're targeting. In one case, one of our clients is targeting doctors. Doesn't necessarily have anything to do with political affiliations. Your niche is doctors. Okay, great. Or your niche is people that are
people who own construction companies.
People that are Porsche aficionados. Maybe they're that's obviously.
You're coming back to my favorite one that I'm trying to get Peter on.
Right, exactly. They obviously have money. That kind of has a built-in income threshold, right? So
you would be surprised at the number of people who can barely make their monthly lease payment. But
it is at least theoretically going to have a little bit. I mean, if you target people that have second vacation homes, then that would be that'd be one niche. Or business owners. There's a lot of broke business owners too, but then you could find business owners that have liquidation events and they've sold their business. So there's lots of niches that you could go into.
Well, we were targeting 50-something business owners with revenue of 10 to 40 million, with the assumption of having a liquidity event and selling the event and targeting them through business brokers.
Yeah. So there's. Yeah, but saying you're everything to everybody, that's the main point here. That's a bad strategy. If you're everything to everybody, you're nothing to nobody. You're the, I think you said it really well a while ago, is you're the guy behind the oak desk in the JCPenney suit. Yeah. And when we look at people's LinkedIn, we looked at somebody's LinkedIn profile we were talking to that wanted to talk to us the other day, a couple of days ago, Mindy, and it's a guy in a suit. It's the same picture. We might as well look at everybody. Now, I'm not saying you should wear a clown hat, but it might be interesting. I mean, it depends on your niche, but you want to be unique and you want to be special. And you shouldn't look like everybody else, because then the only real differentiation you have is whether you got in front of somebody first. Yeah. And maybe whether you talked it fancy and sold them and got them to get started with you before somebody else. That shouldn't be your differentiating factor. That's not a really good way to run a business. Yeah.
And speaking of which, you reminded me of another Dan Kennedyism. We were talking about advisors and how they were trying to have a contest to see who can be the most alike. And remember, the reference was the theme song from Weeds. And I don't know if I'm embarrassed by it or not, but I had no idea what the hell he was talking about. And here's what it is. The theme, I keep saying little houses, but it's really little boxes. Did that come through okay?
Yeah. It's small.
Yeah. Little boxes on the hillside, little boxes made of ticky-tacky, little boxes on the hillside, all the same. There's a pink one, a green one, a blue one, a yellow one. They're all made out of ticky-tacky, and they all look just the same. And the people in the houses all went to university where they were put in boxes. They came out all the same. There's doctors, lawyers, and business executives, all made out of ticky-tacky, and they all look just the same. And they all play on the golf course. They all drink their martinis dry, and they all have pretty children. The children go to school. The children go to summer camp and university, where they're put in boxes, and they come out all the same. That was his reference for advisors. All of them are just the same. There's no distinguishing factor whatsoever in most cases. And we've looked now at thousands of websites and thousands of LinkedIn profiles. And I got to tell you, in almost all cases, you can't tell one from the other. It's just embarrassing. Hey, let's do this. We're going to have to shift gears here a little bit. There's two things that we're doing as an organization, and the way I think about it is we have tiers of advisors that we work with, right? We have those that are, let's say, under $250,000 in revenue. Maybe they're under 6 figures in personal income. And then we have those that are in the, from there up to about $500,000 in revenue with their personal organization. I'm not talking about what Schwab is doing or what Northwestern Mutual is doing, but what they're doing. And then we have the $500,000 to $1 million guys, and we have the $1 million plus guys. And each of those are unique levels on what we work with. We have a level that we are just launching because, frankly, we've been to date almost exclusively focused on the top end, almost exclusively focused on a very tight-knit interaction. But we're launching a level for people who are at that lower level, who are not yet in the 150, 200, 250 revenue range or over the 6-figure personal income range. Because what we've done in the past was just over their level of capability. For everybody on the meeting, if you have not yet gotten a copy of my newest book, it's hot off the presses. And it is available at Amazon and Barnes & Noble and so forth. But if you wanted to give Mindi a call, she'll make sure you have a free copy. And it's appropriate at all levels. But we're right in at the cusp of, and if you register this, you'll get information by email and so forth. But we're right at the cusp of launching the ongoing program for advisors who are just trying to get traction in their practice, in addition to what we do on a normal basis, which is personalized and supportive coaching for established advisors who are in the $250,000 and up revenue range already. Either way, we have something for you to help you grow, and we'd be happy to share with you what that is. The starting point would be give Mindi a call. She'll get a copy of the book. We'll share with you the information on what's most appropriate for you and show you ways that you can grow and develop your practice and really develop from there. Mindi, anything to add to that real quickly?
No, I would love to talk to folks. There's a couple of people I see on the list that I have talked to. So yeah, let's just make sure we make a connection and I have a good mailing address for you.
Yeah, your number's right on by your name.
Yeah,
there,
I did put my number right on the screen to make it easy, and you can call or text that number, whichever you prefer.
Yeah, absolutely. 303-808-8719 if I can read properly. Yes.
And we can put that in the chat as well.
Yeah. I think we have the chat permanently disabled.
No, it's no. I think it's working.
Is it functional?
It is, I believe. Well,
it is.
No, I don't think it is. I don't think it is for everybody else.
It is for us, but not for our population at large.
Oh, okay, good.
So sorry about that, guys. But we'll make sure you have it.
That was interesting on my little presentation, Greg, is they had chat fully enabled, and everybody who was VIP on Zoom. And so as I'm speaking, I can read the chat, respond to the chat, see people's reactions and so forth. And I actually kind of liked it. I've been militant against chat, but it was kind of engaging.
Maybe we have to reconsider that. It just depends on the volume that you get at once.
Well, for our small group of clients, they need to grow a pair and just ask their question.
Yeah, that's right.
In a bigger audience, I think it's helpful and useful. Although, as usual, they ask some really stupid questions. But
how do you really feel?
What's that?
So how do you really feel?
Morons will be morons, right? I mean, I'm teaching them how to market their business, and I mentioned something about my martial arts background, and all of a sudden it was like, well, how did you do it? And I did. I was like, You know, I've got 20 minutes to share with you, and that's not something that we need to is going to have any value to any of us. Let's step on to the next step here, though, Greg, is, and I'm going to go back to something that Dan said to me, which I hadn't really thought of it in this way. But he said most advisors either have a pure sales mentality, and that tends to be the ones that, have grown up captive in one thing or another. And it reminds me of the door-to-door vacuum people, where they send them out after their, circle of influence, and they're trying to pitch their aunt, their uncle, their frat buddies, and their next door neighbor. Or they have an advertising plus sales mentality. And his language was they don't have a marketing mentality. And I thought that was an interesting take on it, because we had been using a lot of times advertising and marketing as kind of a synonymous term. But the takeaway on that was, let's take somebody who just goes and buys leads from somebody. Well, what happens to it? Well, in Ken Fisher's guys, right? I mean, we talked about Fisher's advertising, but their follow-up is horrible. They're a perfect example. They got an advertising mentality and a sales mentality, but no marketing mentality. And the marketing mentality is the methodology for following up, the methodology for screening and creating appointments for the right people who are qualified, the methodology for plowing the field ahead of the meeting to create credibility and to become the guru ahead of time. You see what I'm saying? That's what Dan was saying, is they don't understand any of that. If they have any level of advertising sense, they're paying somebody to generate leads, or they're running ads to get leads, but then the follow-up, and all it comes full circle back to how poorly most events get run, is they don't have a sense of marketing, as opposed to just an advertising, get somebody to register and then pitch them or not pitch them, right? What would you add to that? I thought it was a good distinction.
Yeah, well, that's exactly right, and that's what we see with each of the guys that we talk to. There's no complete picture, but mostly the marketing is so weak and ineffective that we end up spending a lot of time with that, and we never really get to their sales process. And I think the other piece is that because the marketing's so ineffective and they're not doing a very good job, they all think that they're really good at the sales process and the sales, it's kind of a delusion, or we don't really know. We don't really have any data as to whether they're good at sales. I want to know if you're good at doing your getting people started with you when you have a lot of leads, when you have a lot of people that meet your target demographics and or your niche, but you don't know them. They're not the buddies of your buddies, or they're not your own buddies, or they're not a highly qualified referral that got told 15 times to come and visit you. When we generate real leads for you, and you're getting 10 or 20 clients a month, or whatever number you need to get or want to get, and they're just new people that with me, maybe they're, and of course we want to make sure they're prepped for you and they're getting information about you and they look at you as an expert. But the sales process should be, not that the sales process should be hard, but it's not very impressive if you're good at the sales process if you've only got one client every 6 months.
Yeah, well, or even if
your buddy,
or even if you're having one meeting a week. The thing that we find that we have to fix right away is fix the methodology, because again, the example in the spring was all of a sudden we gave somebody more qualified prospects in a week than they had in the previous 12 months.
Yeah.
And it wasn't that they got 5 times the number of sales that week. They got 0 out of them, because it was just so poorly bungled and handled. So you got to fix that ahead of time before you open up the spigot. And anyone who's on here that has a quick question, you're welcome to. I think you can raise your hand, and we'll be happy to promote you. But otherwise, what we're happy to do is talk to each and everybody who is either live or watches the recording, which is going to be a bigger number of participants. we're happy to answer those questions personally, one-on-one. You can just give Mindi a call and we'll put it on our calendar, and we're happy to give you some free advice, happy to give you a focused target for what you're doing. And, if there's some benefit to working together, great. If not, that's fine too. We can decide that if the time comes to look at that. Mindi, anything to leave for the day on our conversation?
Well, I think the main thing is go ahead and give us a call, shoot me a text, because things don't start getting better until you take that first step.
Yeah, it's a good point. Well, we need to take some action anyway.
Yeah, absolutely. Well, what we'll, and again, I was having that question earlier today, is, what specifically do we do? Well, what we do is we, for the higher level people, is we do a very personalized plan of action to show them how to immediately create a lot more revenue and a lot more free time at the same time in their practice and make it operate more effectively. And that's a very personalized process. And really, for all advisors that we work with, we show them how to fix their sales process so that they create a higher level of status, that they're perceived as the guru, that they're talking only to qualified people, and the qualified people they're talking to already perceive themselves as a high status, somebody that they're eager to get on their team. And then at the same time, and of course, depend upon your structure and what you're doing. Certainly for fee-based planners, we work on creating a lot more revenue per client. There's an awful lot of places where people are dumbing it down and creating problems for themselves. For everybody, what we do is we open the spigot and show them how to get a lot more flow. And ultimately, what happens with all advisors is it's about developing their staff and replicating what they're doing through other people. And even if you're, a solo right now, at some point, you can build a lot more duplicatability through having people to pre-screen your calls, to prep people ahead of time, to organize your flow. And certainly the easy thing to do is to hand off the administrative and hand off the paperwork and hand off all of that stuff to people who can do that for you and prep it for you. So we teach them all. And Greg, I think we have yet to come across an advisor who's good at handling his team.
That's exactly right. I haven't. Yeah, there's none.
That was something, by the way, on my trip. I was very impressed. They have 100 people on staff, and everybody's happy and focused and competent and working diligently and everything else. It was a very impressive environment following the stuff that we would do, except, I don't think we're going to have most anybody on the meeting end up with 100 people working for them, but they probably end up with 2 or 3 pretty quickly in order to get the kind of traffic they need. Yeah,
and that's all you need. I think that's perfect. But we definitely want to get your traffic up so that you need that point and help you with if you have anxiety, the thought of having staff will help you with how to manage that so it's reasonable.
Yeah, that's right. Well, on that note, we'll call it a day. I'll keep you guys as we shut down the webinar for today. And again, we're happy to answer any and all questions. Just give us a call and we'll schedule a time to do that.
Perfect. Thanks.